Hi traders, and welcome to the daily recap show for today, which is Monday the 24th of January. So we said that we had seen weakness in the US markets, which is weighing on European indices as well. So we were changing our bias to the bear side. We said support come in at 73.99, 74.08, with higher time frame support at 73.48 to 58. We had aggressive resistance at 74.86 to 95. So let's go and have a look at what happened with the FTSE today. Okay, so quite a lot to cover in today's session. So obviously we opened up, we said that we were seeing some weakness, and we have definitely seen that follow through into the markets today. So we saw this strong push down. We had support at 73.99 to 408. You can see we pushed straight through that. We did get a brief relief rally, and we came down and we held it here, but we didn't get any continuation patterns or anything to confirm that false break. So nothing really of note to enter in on. One thing that you could have done, there was a continuation pattern up here on a retest of this zone, and as we had switched to the bear, as we have changed our bias to the bear side, that is something that you could look to trade off that zone and off the overnight low as a retest of there. Now from there, we had high time frame support around this 73.48 to 56.58 level. There is a reversal here. However, when you see this type of really impulsive price action and something a little bit more underlying going in the market, as I've said previously in these sessions, you want to be switching to the higher time frame. So you want to be looking at the 15-minute time frame. And as you can see, nothing really of note there. There is this one, but you're on the 15-minute chart. There is this reversal here, but your entry is below that zone. So that's not necessarily something I would look to take. And there is nothing in this 73.48 to 58 zone either. Absolutely nothing. Straight through there as well. And on the hourly chart, again, same sort of thing. No reversal from this 73.99 to 408 zone, and certainly nothing here from this in this sort of 73.50 area. The impulsive move was straight through. So that's just a little tip that when you start seeing that impulsive action and price cutting through zones and levels, you really do want to be switching to those higher time frames to make sure you keep yourself safe and don't get chopped in and out of the market. So there was a nice continuation pattern on the FTSE up here. Other than that, hopefully if you'd been switching to those higher time frame charts, you would have kept yourself safe in this falling market as well. So now let's go and take a look at the DAX. So with the DAX, we said it continued to show weakness. We had resistance at 15,600 to 15,625. And then we said if we broke below support at 15,435 to 455, then that opened a move in the coming sessions to higher time frame support zones at 15,100 to 125 and 15,000 to 15,030. So let's go and have a look at today's action. So as you can see, much like the FTSE, we have seen a lot of weakness on the DAX today. And actually, what I said, that breaks below that 15,435 to 455 zone would open up moves in the coming sessions. Well, it's actually happened today. We got the weakness below there, and we've moved down to that 15,100 area, and then even down to the 15,000 area in today's session. So there was a couple of good opportunities early on in the market. We actually took one on the 1 minute chart. Which was back right on the open, whereby we didn't quite make it up to that 15,600 to 625 area, but we rejected it quite quickly. So we tried to push up on the open. We got a strong push back below the moving averages, and then we got this continuation pattern here from that zone. So we just front run that 15,600 area. The markets were overall bearish now. We'd switched our bias to the bears side. So that was a trade that we took and targeted this zone below. There was also a really nice 3-minute trade, very similar. We said in the morning report that weakness below 435 to 455 would see that move down to those lower zones. Now, there was a really nice continuation trade here to get short. And you've got some great risk to reward potential. I wouldn't have necessarily held this all the way down to this 15,100 or 15,000 zone. Maybe you could hold a runner to target those areas, but I certainly we certainly targeted back towards this zone here around that 300 area. So some really good shorting opportunities on the DAX early on in the session, and then again switching to those higher time frame charts to look for those reversals against an impulsive move. On the 15-minute chart, we saw this one here around 15,000. It's not a very clean. It's not a very clean reversal, but there is a reversal there. And on the hourly chart, again, there's absolutely no reversal whatsoever. Move is just moving impulsively through these zones. We've actually almost come to an extremely key area in the market for the DAX, which is around that 14,800 area. So we will have to see what the US markets do towards the end of its session and see what happens in the Asian session overnight, because a break of 14,800 really would be very bearish on the DAX. So that's that. And also just want to show you something on the 3-minute chart. Notice how we have switched our attention to the bear side, and notice just how when we get these push through the zone, notice how we hold them as resistance, and it's certainly this 15,100 zone again. We get a really strong impulsive push down through, we get a pullback, and then we reject it impulsively as well, which has pushed us down into this 14,800 zone. As I say, I wasn't really expecting this bigger move, even though I had switched my bias to the bear side. But these impulsive moves to the downside can be pretty dramatic when they occur. And as I say, that's when you want to make sure you switch to those higher time frame charts to make sure that you keep yourself safe. I also just want to show you something on the S&P, which I noticed over the weekend, which can sort of show you why these moves are happening from a technical point of view. So something really interesting to note. So I'm just going to switch to an S&P chart now. Okay, so this is the S&P 500 weekly chart. Now, obviously the US markets can, when they show weakness, that can really spill over into other markets. And notice how the weekly chart on the S&P this week, notice how much it closes, how weak it closes below those moving averages. Notice how on every touch of the moving average before, since that COVID push down there, notice every single touch has held the moving averages. Several touches of the moving averages that have all held. So it shows that by the dip, small retracement, strong trend, but notice how that has a strong close down below. So it didn't hold the moving average. That in itself shows a sign of weakness that hasn't been seen for a couple of years. Now, just try and put that into the relative market. So, and what that's actually communicating to you. Something has happened that hasn't happened for a couple of years. In fact, the last time it happened was because of when the COVID outbreak. So that instantly communicates something to you that the market is weaker and showing signs of weakness more than it has done since coronavirus. So therefore, that's something to be aware of when you're looking into your trade. And that's why we also switched our sentiment to our bias to the bear side this week. So especially now today, we've seen some follow through there as well. That's definitely showing some weakness. So let's see how the markets react to this over the coming sessions. One good thing about this is that it should create some volatility in into the markets. Volatility in the markets can create opportunity. So hopefully it's going to show us a lot of opportunities in the coming sessions. So I hope you found this session useful. Lots to digest, and I'll speak to you again soon. Cheers, guys.